Hey, what's going on, guys? Leo. So we're going to be going over the FOMC meeting today, and it's interesting because we're kind of getting some mixed signals from the Fed. So let's see if we can't weed out what the truth is as to what they're actually thinking. So just diving in here, I'm going to take a look. So Federal Reserve left interest rates between the 4.25 and the 4.5. So, no change in interest rates. Right now, the market's pricing in that there are going to be 3 interest rate cuts this year. The Fed's saying that there's only going to be 2. So moving on. Now, this is what was interesting to me, and this is kind of where they're saying one thing, but their actions are telling me something different. So the Fed is slowing their Treasury runoff, the quantitative tightening from 25 billion to, I believe it's 5 billion here. So, and that's per month. So what does that mean? Well, there are 2 methods that the Fed has to lower interest rates. Both of them basically have to deal with reducing liquidity, money flowing through the economy. So they can increase interest rates, which makes borrowing credit more expensive, meaning that people aren't as willing to borrow money, and they can also offload assets like mortgage-backed securities that they hold on their books. So what they're saying here is that they're going to decrease the amount of quantitative tightening that they're doing. You can kind of think of it like a Bitcoin halving. Basically, they're reducing the sell pressure. Whenever the Bitcoin halving comes around and the block reward gets cut in half, that effectively is cutting the amount of sell pressure that miners are doing. Well, what they're doing here is they're cutting the amount of sell pressure that the Fed is doing on assets they hold on the books. Now, if we look at some other data here, so the Fed is saying that they're expecting that year-end core PCE forecast, they've increased it from 2.5 to 2.8. So they're saying that they think inflation is going to go up, but that's not really what we're seeing. If we look at the data, inflation is coming down. So, we come over here, look at the Cleveland Fed, who's historically been very accurate at predicting inflation numbers. They're saying that core PCE in March is going to go to 2.47. So inflation, from what we can tell, is coming way, way down. So they're kind of saying that, inflation is going to go back up again, but that's not really what we're seeing. In fact, this month's inflation report showed that it came down more than they were expecting. And so now if we look at the inflation chart, you can see this trend here. We just draw a trend line on inflation levels. You can see how it's trending down. It's just like stocks. It moves up a little bit, it moves down. But the overall picture here is that we are trending lower. So what the Fed is saying here, where they're saying, it's going to go from, they're raising their forecast from 2.5 to 2.8. They're effectively saying that they're thinking that, as we're trending down, that's going to spike up towards the end of the year, which I don't see being the case. And if you think about it, if that was the case and they were thinking that inflation could potentially come back up, why would they be reducing the amount of quantitative tightening that they're doing? Why don't they just hold steady? Doesn't really add up. So what I've noticed with the Fed, what they'll do is they will take actions that don't match up with their words. And I think what that is because, if, for example, like if the Fed just came out and said, hey guys, we're going to, be cutting more rates. We're going to be, reducing our books. We're going to do quantitative easing. If they sound too bullish, what's going to end up happening is the markets are going to spike, and that risks things getting a little bit crazy before they want to. So they kind of have to play a balancing act of beginning to cut rates, getting to get into a quantitative easing type of environment, but also kind of talk down the market so that it doesn't get too euphoric too soon. So let's take a look here and see what Fed Chair Powell has to say.
How much of it is tariffs? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation.
So essentially, he's just saying, obviously, he's saying that some of this inflation is caused by tariffs. I think it's a bit early to be saying that. The tariffs haven't hardly gone into effect yet, so they're just barely getting started. And I still think I don't think this is a long-term thing. I think this tariff stuff's going to get resolved. So if they're trying to base that inflation will rise throughout the end of the year based on tariffs, that remains to be seen. I think what we can take away from the whole tariff thing is it's just uncertainty in the market. We don't know how it's going to play out. We don't know if they're going to end up staying and they end up being a longer-term thing, which can potentially cause inflation, or if it's just a negotiating tactic that he's trying to use to get what he wants from these other countries. We just don't know yet. So something we want to keep an eye on here. President Trump's apparently going to be, he's expected to make a major update on upcoming crypto strategy. So kind of just keeping an eye on that. I will update y'all as soon as we get some sort of a release as to what this updated crypto strategy could be. But taking a look here at Ethereum, you notice in the prior video, we had talked about how it was kind of making this ascending triangle type shape. It's not, to me, in my trading, this isn't considered a ascending triangle pattern, but the psychology of it's still there, where you have this resistance level and you make that higher low, you test the resistance, make that higher low, and we did break above it like I thought we would. So, just looking here, it looks like it's in some sort of a third wave. Whether that third wave is done yet, it remains to be seen. We did hit our third wave target. So if you come in here, measure up to the first, go down to the second, most likely target's going to be the 1618 extension of the first. So it's already gone there. Next most likely target for a third wave would be the 2618. Whether we get there or not, we don't know. We don't know where the market's going to stop. That's not a trade. This is just something that we're observing. So what I would like to see is it to get up to the 2300 level, because I want to see us break this area. And really, ideally, I would love it if we could break this. And reason being is because that's a trend, right? So a trend is defined by making, for example, here you make a lower low, right? So then you come up, you make a lower high, and then you make a new lower low. And so the only way for a trend to change really is if you can break the prior lower high and put in a new higher high, and then you may put in a higher low and a higher high and so on. And now you have a new trend established. So that's why I want to see it break this point here. We can establish a new trend moving higher. Now, something I want to take a look at here that I had noticed, I don't believe I talked about this in the prior video, but if we look at the Solana to Ethereum chart, it doesn't really, it's not looking good, to be honest. If you put this chart up, it's got a rising wedge forming here. It's got bearish divergence. So it looks like this thing is going to break down. It's looking really weak here. And so we'll see Ethereum really outperform against Solana. And if we take a look at the chart on, give me one second, Solana. So you come in here and, it's basically the exact same pattern playing out in the USD form. You get this rising wedge pattern and now it's breaking down. And then, the targets here are just based on algorithm targets, buying at the 50 all the way down to the 618. So we're seeing the exact same pattern playing out on the Ethereum or the Solana to Ethereum trading pair. So I would expect that this is going to break down going forward. So it's something to consider. I'm not telling people how to trade or what to trade. I'm just pointing out things that I'm observing. So I think that pretty much wraps up this video. I will do an update on the updated U.S. crypto policy as soon as we get information on that. But until next time, y'all take care.